crashing. Dump everything now before we lose it all.
It's freedom. It's the promise of a new financial system. No, it's a casino, where mostly the scammers win. Some call it digital gold, a store of value. Others call it a revolution challenging the Federal Reserve itself. But one question remains: is cryptocurrency truly reliable, or just a beautifully packaged gamble? In 2021, El Salvador became the first country in the world to declare Bitcoin legal tender. President Nayib Bukele called it the evolution of humankind.
I keep it there because some people still use it, but honestly, most prefer the cash.
But for years later, the story has changed. In January 2025, El Salvador's legislature stripped Bitcoin of its legal tender status, a condition tied to a $1.4 billion loan deal with the IMF. Today, accepting Bitcoin is no longer mandatory for merchants. It's entirely voluntary. Government surveys show that a majority of the population now considers Bitcoin a failed project, and most remittances still flow through the US dollar, not crypto wallets. The country once held up as crypto's greatest success story has quietly become its biggest cautionary tale. The first test of reliability is stability. And this is exactly where Bitcoin is most exposed. In October 2025, Bitcoin reached an all-time high, above $126,000, but just 4 months later, in February 2026, its price collapsed by 52% to around $60,000, including a single-day drop of 15%. Analyst predictions for 2026 confirm the same uncertainty. Some forecast Bitcoin falling to $75,000. Others predict it could climb to $225,000, a gap that wide is itself proof that no one can confidently predict this asset's price. Can a currency whose value might be cut in half while you sleep really be trusted for everyday transactions? Volatility is only the first problem. The second, and perhaps more alarming, is security. According to Chainalysis, hackers stole approximately $3.4 billion from crypto platforms in 2025, the highest annual figure on record. The largest single chunk came from the February 2025 breach of Dubai-based exchange Bybit, around $1.5 billion, attributed to hackers linked to North Korea. And this isn't limited to big companies. Personal wallet compromises, attacks targeting ordinary individuals, surged past 158,000 incidents in 2025 alone. Meanwhile, back in 2022, the collapse of the Terra Luna stablecoin wiped out roughly $40 billion in value within days, proof that even coins branded stable aren't fully safe. These very problems have forced governments into action. In July 2025, the US President signed the GENIUS Act into law, America's first comprehensive federal framework regulating stablecoins. The law sets strict requirements for issuers around reserves, disclosure, and licensing. In Europe, the MiCA regulation is attempting to bring bank-like transparency to crypto exchanges and wallets, but regulation doesn't mean guarantee. Experts warn that if depositors suddenly lose confidence in a stablecoin issuer's reserves, it could still trigger a traditional bank-run style scenario, just like what happened with Terra Luna. Regulation can reduce risk, it cannot eliminate it. Despite all of this, Wall Street hasn't run from crypto, it's moved closer. Bitcoin ETFs now let institutional investors buy Bitcoin exposure directly through the stock exchange, without ever touching a wallet. Companies like Strategy hold billions of dollars in Bitcoin on their balance sheets. But that same institutional money is a double-edged sword. During the 2026 crash, as investors sold off their ETF holdings, total ETF net assets dropped from over $100 billion to around $85 billion in just weeks, proof that big institutional money can drive the market up just as fast as it can drag it down. Institutional adoption brings legitimacy, but it doesn't eliminate volatility. Sometimes it amplifies it.
Diversification isn't just about balancing stocks and bonds. It's about spreading risk across different asset classes, both domestically and
So what's the answer? Some financial experts, like Professor Carol Alexander of the University of Sussex, say Bitcoin will remain in a high volatility range through 2026, meaning wild price swings aren't a temporary phase, they're a permanent feature. On the other hand, technology experts largely agree that the underlying idea of blockchain, or decentralized, tamper-proof ledger, is genuinely innovative, whether or not Bitcoin itself succeeds as a currency. So the truth splits in two. As a payment currency, Bitcoin is still unreliable, too volatile, a constant hacking target, and only partially regulated. But as a speculative asset and a piece of technology, it has proven itself, and it likely isn't going anywhere. Back to that small shop in El Zonte, where our story began. The Bitcoin sticker is still on the door, but most customers still pay in dollars. That image alone is the most honest answer to our question. Cryptocurrency is a promise that hasn't yet been fulfilled, neither a complete failure nor a complete success. And perhaps that is the real truth of this entire experiment.